Again, good morning, everybody. My name is Kit Gallup with the Retirement Systems of Alabama, and I have the pleasure of speaking to you today about your PEEHIP health insurance in retirement. So I'd like to welcome you to our 2020 Auburn University Virtual Benefits Fair. Today I'm talking about PEEHIP. I'll be back tomorrow afternoon to speak with you about your TRS retirement benefits as well as the RSA-1 deferred compensation plan that you may be interested in participating if you aren't already. Now, PEEHIP, as I said earlier, is a public education employees health insurance plan. And as retirees from Auburn University, you can enroll in that. Let's see here. So first and foremost, I'd like to talk about the different coverages that are available for Auburn University retirees and their dependents from PEEHIP. Now, we like to start off first by talking about non-Medicare eligible retirees. Non-Medicare eligible retirees are those who are going to be, for example, under age 65 at retirement. Medicare eligibility kicks in at 65 for most Americans. However, there may be some of us who may be eligible to enroll in Medicare at a younger age due to either a disability or by being approved for a disability from Social Security, or having end-stage renal disease or ALS, better known as Lou Gehrig's disease. That's one way that you can reach Medicare eligibility before you turn 65. But generally speaking, 65 is when you become Medicare eligible. So if you're younger than 65 at retirement, you have two different health insurance plans, primary health insurance plans that you can enroll in. The first is our PPO, which is a Blue Cross Blue Shield of Alabama, and the second is an HMO, Viva Health Plan. Now, that's a product of UAB, so we see a lot of people up in the Birmingham area, Jefferson County, Walker County, who are maybe more inclined to enroll in the Viva Health Plan, but the vast majority of our members who are non-Medicare eligible retirees have the Blue Cross Blue Shield of Alabama, the PPO plan. So those are our two primary health insurance coverages that are available for our non-Medicare eligible retirees. Now, we also have the supplemental medical plan. Now, the supplemental medical plan is secondary insurance. It is not primary insurance. It's going to supplement a primary insurance policy that you're enrolled in, perhaps through a future employer or maybe through your spouse. Now, I'll talk a little bit more about that supplemental medical plan in just a little bit. The Southland optional plans are also available for our non-Medicare eligible retirees from Auburn University. We have 4 of them. They each have their own premium. They're all $38 a month. For each one is $38 a month for individual or family coverage, with the exception of dental coverage. Family dental is going to be $50 a month through our Southland optionals. Okay, so these are what's available to you as a retiree, as a non-Medicare eligible retiree. Now, as a Medicare eligible retiree, we of course have those same Southland optional plans available, but the difference here is with your primary health insurance coverage, we have a Medicare Advantage plan through PEEHIP. It's a Humana Group Medicare Advantage plan that does include a prescription drug benefit. So there's no reason to go out and purchase a separate Part D for drug plan when you're enrolled in our Medicare Advantage plan. So this is going to be what's available for Medicare eligible retirees and their Medicare eligible dependents. Now, we refer to members coming from universities as prospective PEEHIP subscribers. So all you have to do in order to enroll in your PEEHIP is to turn in a retirement application to the teacher's retirement system. When you turn that into us, PEEHIP will automatically in turn respond to you by providing enrollment forms after we get your retirement application. Very simple, nothing you need to do, just fill out your retirement application, turn it in. I'm going to talk about that retirement application process tomorrow, by the way, but if you turn it in, all we do is, in response to that, is send you your PEEHIP enrollment forms. Very easy to do, okay? Now, prospective subscribers, those coming from Auburn University, of course, that's who I'm speaking with today. As I said, you have different choices of what you can enroll in at the time of retirement. At the time of retirement, you can enroll in either, if you're non-Medicare eligible, the Blue Cross Blue Shield PPO or the Viva HMO. Medicare eligible retirees and dependents who are Medicare eligible on retired contracts, you have the PEEHIP Humana Group Medicare Advantage plan. Now, the supplemental medical plan is only available for non-Medicare eligible retirees. And as I said earlier, keep in mind that supplemental medical plan While it's free, it is secondary insurance that would work in concert with your primary insurance to pick up co-pays, deductibles, and co-insurance and so forth. Now, as far as enrolling in any of our Southland optional plans, you can only do that during open enrollment. And our open enrollment period is a very generous one, but of course it only comes, one time a year. It doesn't last all year. So the only time to enroll in our Southland optional plans is during open enrollment. So what you may want to do, for instance, if you have dental coverage with Auburn University, you may want to pay for the Cobra Dental until our open enrollment period begins. And then you can enroll, until our open enrollment period begins, you can enroll in our dental, and that will become effective on October 1st each year. That's when the plan year starts. So say if you're retiring from Auburn University on June 1st, you may want to carry the Cobra Dental through Auburn University all the way through the end of September. So during our open enrollment period, you can enroll in our dental plan to have it effective on October 1st. Okay, as I said, the Southland optional plans each have their own premium. Their premiums are $38 a month. With the exception of family dental, that's going to be $50 a month. All other plans are $38, whether it's individual or family coverage. Alrighty. Now, there are some choices with no cost. I mentioned just a moment ago that supplemental medical plan is a free plan for our retirees who are non-Medicare eligible. Okay, so only non-Medicare eligible retirees can enroll in the supplemental medical plan. So if you're already Medicare eligible, if you're 65 or older, you're not going to be able to enroll in the supplemental medical plan. Now, what this plan does is it supplements a member's primary coverage provided by a spouse or a future employer. So say if you were to leave Auburn University and go to work for, I don't know, the federal government, you would have federal government health insurance coverage. And if you picked up the PEEHIP supplemental, that would pick up your copays and deductibles and co-insurances that you would incur on that federal government policy, for example. Now, primary coverage with the supplemental medical plan typically has to be employer-sponsored group health insurance coverage, okay? It cannot be Medicare. You cannot use the supplemental plan to supplement Medicare. Or say if you're on your spouse's PEEHIP policy, you're not going to be able to get the supplement to supplement PEEHIP. That wouldn't make much sense for PEEHIP, of course. And a state employees insurance board or local government health insurance plan, those are here in Alabama. The supplemental is not going to supplement those types of policies. Or TRICARE or a marketplace or high deductible plan. So as I said, the supplemental medical plan is typically going to work in concert with other primary coverage that's offered typically through a spouse or a future employer. Alrighty. Now the supplemental medical plan is free. It comes with no cost. And the reason why we provide it for free is because PEEHIP is self-insured. Anytime that we can get a potential subscriber of PEEHIP enrolled in the supplemental medical plan instead of the primary health insurance plan, that's going to help PEEHIP's bottom line. Because say if you were to go into the hospital to get a major procedure done, PEEHIP would gladly pay that $200 copay that you may have through on that other policy that you're enrolled in, instead of having to pay for the entire procedure, which your primary coverage would do. Okay, so it's a great plan if you have other primary health insurance coverage and you are a non-Medicare eligible retiree. The other free plan, so it's the Southland optional plan. So with the Southland optional plan, you can choose 2 of the 4 at no cost if you have other primary health insurance coverage that's not PEEHIP. Alrighty, so say if you go to work over in the state of Georgia and you want to, you're going to get that insurance for that future employer in Georgia. Instead of getting the supplemental medical plan, you could enroll in 2 of the 4 Southland optional plans at no cost. Alrighty. Now, as far as changing your coverage with PEEHIP, generally that can be only done at open enrollment. Okay, as I said, we're going to talk about open enrollment in just a second, but it's a very generous period of time. Open enrollment with PEEHIP is usually the only time that you can make changes unless you experience a qualifying life event. Now, a qualifying life event would be, getting married, for example, and you want to add your spouse to your policy. You could do that within 45 days of that qualifying life event transpiring. So that would be a special enrollment period with PEEHIP. Okay, is if you experience a qualifying life event. Retirement in and of itself, however, is not a qualifying life event. The fact that you're losing your coverage at retirement from Auburn University, there is a qualifying life event that would allow you to enroll in PEEHIP, but you have to do so at retirement. If you don't, then you'll have to wait until open enrollment to enroll in PEEHIP, okay? Now, Auburn University retirees, they can enroll in PEEHIP coverage at the time of retirement, but only with the dependents who were already covered on their Auburn University policy previously. So, for example, if you have single coverage right now with Auburn University, when you retire, you're not going to be able to enroll in family coverage with PEEHIP. You'd only be able to enroll in single coverage with PEEHIP if you only had single coverage with Auburn University. So I see Gary's asking about open enrollment dates. Well, that brings me to the next slide here. You're beating me to it, Gary. Open enrollment for retirees is the same as it is for our active members. It's a very generous period of time. It's 72 days, actually, if you do it online, July 1st through September 10th each year. Now, if you make changes during open enrollment on our member online services portal, if you do it online, you get that immediate confirmation that the change has been accepted. So we always encourage people to do it online because you get a little bit extra time to make those changes, as you can see up on the screen. If you do it online, you have 72 days. If you do it by paper, it's July 1st to the last business day of August. And that doesn't necessarily mean August 31st, okay? It could be earlier than that. It's the last business day of August. But if you make the changes on our website, the RSA website, which I'm going to show you in just a little bit, you can make those changes all the way up until September 10th. Those changes become effective October 1st. So as I said, for example, earlier, when it comes to our Southland optional plans, as a retiree from Auburn University, you can only enroll in those Southland optional plans during our open enrollment period. So say, for example, if you had dental insurance with Auburn University and you retire on June 1st, you'd want to probably pay the COBRA rate for that dental coverage if you want to all the way through September, and then during our open enrollment period, pick up the Southland Dental to be effective on October 1st. If you don't need to make changes each year, then no action is required. It's simply a very generous period of time, gives you plenty of time to think about any potential changes you'd like to make. And if you would actually make those changes, they become effective October 1st. So that's our open enrollment period. Alrighty. Now, if you are wishing to pursue future employment after you retire from Auburn University, that may have an impact on your ability to carry PEEHIP health insurance in retirement. Future employment can impact your eligibility to carry PEEHIP insurance. Future employment is something to really remember here, because if that future employer pays at least 50% of the individual health insurance cost, then you would be obligated by law to pick up that future employer's health insurance coverage. So this is very important to remember. If that future employer pays for more than 50% of the individual cost of your health insurance coverage, you have to pick up that coverage. Now, you can always drop down to the supplemental, for example, on the first of the following month, so that supplemental is free, of course, and you could have the supplemental that would supplement your future employer's health insurance plan if you're a non-Medicare eligible retiree. Now, you can always re-enroll in PEEHIP within 45 days of losing that future employer's health insurance coverage. Simply losing that coverage is considered a qualifying life event. And as I said, 45 days from the loss of that coverage, you can re-enroll in PEEHIP. If you don't do it within that 45-day window, then you would have to wait until open enrollment to re-enroll in PEEHIP. Now, this law came into effect about 15 years ago. So if you fail to enroll in that future health insurance coverage through that future employer, then that will result in the loss of your PEEHIP coverage, because we will eventually discover through claims data that you have other health insurance coverage that you could be enrolled in, but you weren't. So if that were to happen, you would lose your PEEHIP health insurance coverage. So be very conscientious about this rule. Say, for example, if you have to carry family coverage, it's you and your spouse, maybe some children on your policy, or maybe just you and your spouse. A lot of employers will heavily subsidize their employees' health insurance coverage, but they may not subsidize anything towards family coverage. So what the law states is that if that future employer pays more than 50% of the cost of that individual health insurance coverage, then you are obligated to pick it up. But if you need to insure your entire family, and that future employer says, well, yeah, you can bring your family on the policy, but we don't pay anything towards family coverage, you may end up paying a lot for that future employer's health insurance coverage if you need to insure your entire family. So you may want to reconsider that future employment if it's a very high premium. I had a gentleman one time that was contemplating going to work for a private sector employer after retiring. And that private sector employer offered him individual coverage, and it was very, very reasonable cost. But they didn't pay anything toward family coverage, and he needed to insure his entire family. And what it was going to end up costing him was well over $1,000 to insure his family through his future employer's coverage. So he reconsidered going to work for that future employer because he knew about this rule. So take this into consideration if you're wishing to pursue future employment. Now, if you and your spouse are both eligible to carry PEEHIP in your own right, say, for example, your spouse is a retiree and you're a retiree and you're both eligible to carry PEEHIP. Well, if one of you chooses to pursue future employment, that one who chooses future employment, if they would get on the spouse's coverage, the family policy, then that would negate this rule of having to pick up that future employment health insurance coverage. So PEEHIP married to PEEHIP. If one of you decides to go work for a future employer, the other one who does not has the family coverage, then that one who goes to work for the future employer would not be obligated to pick up that future employer's health insurance coverage. Now, I said earlier that I was going to talk to you a little bit more in detail about Medicare. Medicare and PEEHIP dovetail. Once you become Medicare eligible, we offer our Medicare Advantage plan for our retirees and those dependents who are Medicare eligible on your retired contract through PEEHIP. So there's two different parts of Medicare that I want to focus on today, and that's Part A and Part B. In order to have PEEHIP health insurance when you reach Medicare eligibility, you have to have Medicare Parts A and Part B. Okay, Parts A and B. Part A is hospital insurance. For the vast majority of us, that's going to be free, so long as we paid in FICA taxes over 40 quarters or 10 years during our lives, then we should be getting Medicare Part A for free. Now, Medicare Part B is medical insurance, and that's going to be your doctor's visits and so forth. That is not free. Part B's base premium in 2020, or the standard premium in 2020, is $144.60 a month. I suspect that's going to go up in 2021, but I'm not exactly sure how much. Medicare Part B, however, can be more costly for those who are highly compensated employees. What I mean here is when Part B looks at your to determine your Part B premium, whether you pay the standard premium or a higher premium, Medicare is going to look at your earnings from 2 years in arrears. So they look at your tax returns, say in 2020, they look at your 2018 tax return to see how much you actually made in 2018. And if you made over a certain threshold, then you would be paying more for that Part B premium. There are several different levels of what that Part B premium would be, but understand that it could be more than that standard premium of $144.60 if you're a highly compensated employee going into retirement. Okay. Now, in order to be enrolled in our Humana Group Medicare Advantage plan through PEEHIP, which is a Part C plan, you have to already be enrolled or also be enrolled in Part A and Part B of Medicare. If you're not enrolled in Part A and Part B of Medicare, you will not be enrolled in the PEEHIP Humana Medicare Advantage plan. So you would not have any coverage. If you are not in Part A and Part B, you will not be enrolled in our Humana Group Medicare Advantage plan. Now, a Medicare Advantage plan is a Part C plan, and Part C incorporates all the different parts of Medicare. In our plan, it also incorporates Part D, a prescription drug benefit. So when you're looking if you're getting close to 65, I'm sure you've been inundated with lots of direct mail about enrolling in this plan or that plan or Part D plan. Just understand when it comes to Medicare Advantage plans, our Medicare Advantage plan, you have to be enrolled in Part A and Part B. Okay, very simply put, you have to have Part A and Part B to be enrolled in Medicare Advantage plan through PEEHIP. So if you're not, or you're retired, or your dependents are not when you retire, and they're supposed to be, you won't have coverage with PEEHIP. Very simple to understand that. So when should you get Medicare? Well, two things have to transpire before you'd be required to get enrolled in Medicare. Two things. So in order to be enrolled in our Medicare Advantage plan, you have to have Medicare Parts A and B. Two events have to happen at the same time. When you're eligible, which I said earlier is typically age 65, could be earlier due to a disability, but generally speaking, age 65 is when you become eligible for Medicare. And when you are retired or a dependent covered under a retiree policy. So if you're still working right now and you're well over 65, you don't need to have Part B. You might as well go ahead and enroll in Part A. It's free, but Part B, there's no reason to enroll in it if you have your Auburn University coverage right now. But when you retire, in order to carry PEEHIP health insurance coverage, if you're already 65, you would have to be enrolled in Medicare Parts A and B in order to be enrolled in our PEEHIP Humana Group Medicare Advantage plan. We do not allow a grace period to enroll in Medicare at the time of retirement. If you are 65 when you retire, or your dependents are 65 when you retire or older, you must be enrolled in Medicare on the date of your retirement, Parts A and Part B, to be enrolled in our Medicare Advantage plan. There is no grace period to enroll in Medicare. Now, Medicare does have grace periods. They usually talk about the 7-month open enrollment period, the 7-month enrollment period of three months before you turn 65, the month you turn 65, and 3 months after you turn 65. No, with us at PEEHIP, you have to be enrolled in Part A and Part B when you're eligible and retired. Okay, eligible and retired. So if you're retiring before age 65, when do you get Medicare? Well, if you retire before age 65, you're not yet eligible for Medicare. So you've only met one of those conditions. You've retired. That's just one of those conditions. You're not yet Medicare eligible. But when you and your dependents on your contract become Medicare eligible at 65, you have to have Parts A and B in place. And you will automatically move from either the PEEHIP Blue Cross Blue Shield or the PEEHIP Viva HMO into the PEEHIP Humana Group Medicare Advantage plan. It's an automatic thing, but you have to have Parts A and Part B to be enrolled in the Medicare Humana plan, okay, the Humana Medicare plan. So if I'm 62 when I retire, and my wife, she's 63 when I retire, we're both not Medicare eligible. We're not 65, but I've retired. So we're both enrolled in the Blue Cross Blue Shield through PEEHIP. And then when my wife turns 65, a year before I do, she would want to enroll in the Medicare Parts A and B, and then she will automatically transition over to the PEEHIP Humana Group Medicare Advantage plan. Now, when should she enroll? Well, if your birthday, say if my birthday is June 21st, I become eligible for Medicare on the first day of the month in which I become age 65. So my birthday is June 21st. I become eligible for Medicare on June 1st. So I would want to contact Social Security, who handles the enrollments with Medicare, about 3 months before I turn 65 so that I can enroll in Medicare Parts A and B to be effective on the first day of the month in which I turn 65. Now, in the case here that I said my wife, she's a year older than I am, she's going to get to 65 a year before I do. She'll be enrolled in the Medicare Advantage plan, and I'll still remain under the PEEHIP Blue Cross Blue Shield plan. So it'll be a split contract in that respect, and the premiums will reflect that as well. Okay, I'll talk about the retiree premiums in just a little bit. Now, if my birthday is on the first day of the month, say if I were born on June 1st, I would actually become eligible for Medicare on the first of the month prior. So if I was born on June 1st, I'd become Medicare eligible on May 1st. And that's only for those of us who are born on the first day of any given month. All righty. So when I turn 65, then I too would have Medicare Parts A and B in place on the first day of the month, and I'll then transition over to the PEEHIP Humana Group Medicare Advantage plan. Now, if I'm working beyond age 65, Auburn University coverage remains my primary coverage, okay, for the active employee and those covered dependents, regardless of Medicare eligibility. You remember, if I'm 65 and I'm still working, I'm not yet retired. I've met one condition. I turned 65, I'm eligible, but I'm not yet retired, so I don't need to enroll in Medicare Part B and pay that premium. I could go ahead and enroll in Part A at 65. That's free, okay? So I'd go ahead and enroll in Part A, but I would not need to enroll in Part B until I retire, or a few months before I retire, I'd start the process so that I have my Medicare A and B in place, effective on my date of retirement. Okay, so you can decline Part B while you're actively employed, but you must be enrolled in Medicare Parts A and B to be enrolled in our Medicare Advantage plan. All righty. Now, some of you may have TRICARE coverage if you're retired military and you would like to continue your TRICARE for life coverage. TRICARE requires you to enroll in Medicare Parts A and B when you become eligible, regardless of your coverage with Auburn University. So just remember, if you are wishing to continue your TRICARE for life coverage, which turns into TRICARE for life when you become Medicare eligible, then you need to be enrolled in Parts A and B in order to have that TRICARE coverage. If you're not enrolled in Part A and Part B, then you would not have TRICARE once you become eligible for Medicare. So you need to be enrolled in Medicare Parts A and B if you're TRICARE at age 65, even if you're still going to be working at Auburn University. I don't know if we have too many people who fall in that situation, but that's something to consider when you're dealing with retirees from the military. Now, PEEHIP does have a wellness plan. It's very simple. It's been revised this year, and it only applies to those who are non-Medicare eligible retirees and non-Medicare eligible spouses who are enrolled in the PEEHIP Blue Cross Blue Shield plan. So those of you who are not already enrolled in our PEEHIP Blue Cross Blue Shield, you're not doing this PEEHIP wellness plan, but as a retiree, if you enroll in the Blue Cross Blue Shield plan as a non-Medicare eligible retiree or a non-Medicare eligible spouse on a retiree's contract, then you would have to do the wellness program, or you would have to pay $50 more a month for your health insurance coverage for you if you didn't get it done, and for your spouse if your spouse didn't get it done. Now, we've really streamlined this wellness program. We've tried a lot of things with it over the past couple of years. We've experimented with the wellness program. What we've learned is trying to simplify it is the best way to make sure that our members are able to get it done. So we will send you enrollment information about your PEEHIP health insurance, but also about the wellness program requirements. You're coming from Auburn University. I don't know if you have a wellness program there, but as a retiree who's non-Medicare eligible, enrolled in that Blue Cross Blue Shield through PEEHIP, you will be required to get that wellness program completed each year. It's just a screening, by the way, no extra work. Simply that wellness screening, and you're good to go. Okay. Now, it's not required for our Medicare eligible retirees and Medicare eligible spouses who are on retired contracts, of course, or children. Your children who are on your policy would not need to get it done either. And if you're enrolled in only, say, the Viva HMO plan, instead of the Blue Cross plan, you had the Viva HMO, you don't need to get the wellness screening done. Or if you just have those optional plans or the supplemental medical plan, you would not need to get the wellness screening done each year. It's only those who are enrolled in the Blue Cross Blue Shield group 14,000, okay, for our non-Medicare eligible retirees and non-Medicare eligible spouses. Now, I said to you earlier that I'd get to the premiums, and this happens to be the meat of the presentation because everybody wants to figure out how much does this PEEHIP actually cost me in retirement? How much is it going to set me back? Because usually determining what your PEEHIP premium is going to be helps make that decision of whether you would like to retire or not, okay? So understand that when it comes to your PEEHIP premiums in retirement, we're looking at two pots of money. We're looking at what your base premium is and what what the state is contributing based on whether you're Medicare eligible or non-Medicare eligible in retirement. So we have two pots of money here. And then we have some cost shifting going on, right? So we have these three components that help go towards determining what your PEEHIP retiree premium will be. As I said, first we start with the base premium. And I believe there's about 16 different base premiums. You have individual coverage who's non-Medicare eligible, individual who's Medicare eligible. You have a different base premium for that. You have family coverage, which is going to be different base premium. If you have Medicare eligible family coverage, would be a different base premium. So there are several different base premiums, and you can find them in the member handbook, which I'll show you in just a little bit when I finish up the presentation today. Now, the premiums are based on a sliding scale. And the sliding scale was enhanced back in 2012. Okay, they say enhanced, but it actually made it a little bit more expensive for us as retirees, as the state wanted to make sure that retirees were paying a larger sum towards their retiree health insurance coverage. Now, once we determine what your base premium is going to be, then we apply these three components. The service component is a cost shift here where we will move 4% of what the state contributes for each year that you lack from 25 years of service. So say if you're retiring with just 20 years of service, you'd be 5 years away from 25 years of service. So you would pick up a 4% cost shift for every year that you lack from 25 years. So if I had 20 years at retirement, I'm 5 years away from 25, 5 times 4% would be a 20% cost shift. So 20% of what the state contributes on my contract is going to be shifted over to my base premium. If I work over 25 years, say if I'm retiring with let's say I'm retiring with 30 years of service credit, okay, then there'll be a cost shift from my base premium over to what the state contributes. So it'd be a 2% cost shift for every year that I work over 25 from what 2% of what the state contributes will be pulled off of my base premium, put back onto the state, okay? So say if I had 30 years of service, it would be a 10% cost shift. 10% of what the state contributes will be pulled off of my base premium and put back on the state. So it behooves us to work longer because it does help reduce our PEEHIP health insurance premium. The other component is age, and this is something that was added back in 2011, 2012 when the sliding scale was enhanced. The age component is a 1% cost shift for each year the member is under age 65. Now, for some of us young retirees, I started working for the state at 22. If I retired at 47 after 25 years of service, that's feasible, but I would be actually paying a hefty age component premium, right? My age component would be, if I were left at 47 years of age, I would be 18 years away from 65. So 18% of what the state is contributing on my contract would be put back onto the my base premium, okay? Now, the good thing is this age component does get removed upon reaching Medicare entitlement at age 65, okay? I could get it removed earlier if I qualified for Medicare due to a disability, for example, at a younger age, but generally speaking, it goes away when we reach age 65, when we reach Medicare entitlement. Now, one thing to remember with this age component, it does not decrease every year we get closer to 65. So if I retired at 47, it would remain at 18% until I turn 65. It wouldn't go down 1% every year that I got closer to age 65. The subsidy component, this is a little bit tricky to explain, but back when the state legislature asked or tasked PEEHIP with determining how much more it was going to cost the state to insure non-Medicare eligible retirees as opposed to active employees, the state didn't want to subsidize those non-Medicare eligible retirees to the same extent they did active employees. And so PEEHIP has to look at claims data every year to determine how much more it's costing the plan to insure those non-Medicare eligible retirees versus active employees. And what that subsidy is for plan year 2021, that started October 1st of this year, it's $201.25 per month. So yes, you probably already figured that $201.25 is being tacked on top of your base premium if you are a non-Medicare eligible retiree. Okay, so that subsidy can change each year. It went up a little bit from last year. When we first started implementing it back in 2012, it was $97 a month. But as you know, things become more expensive, we get more non-Medicare eligible retirees. That subsidy has gone up. So this year it is $201.25 per month. So that's tacked on top of your premium, your base premium. Now, just a little hint on how we can calculate your retirement premium. If you go to our website, rsa-al.gov, I'm going to show you real quickly what our website looks like and how to access the calculator. You see, today we had the 5 different plans. We're going to be talking about PEEHIP. That's what we're discussing now. But if you go to our homepage, rsa-al.gov, you hit the calculators button, okay? In this calculator button, you'll be provided 2 different links for PEEHIP Retiree Premium Calculator. Use the one that says non-MOS. If you had PEEHIP already, which you don't, you work at Auburn University, you could use the one where you log into your account. But since you don't already have PEEHIP, use the non-MOS PEEHIP Premium Calculator. So if I click on that, I'm just going to run through an example here. Understand that these premiums are based on the fiscal year 2021 rates. Okay, so we can't project what 2022 or 2025 is going to be at this point, but you can get a rough idea of what your premium is going to set you back as a retiree. So say if I were to go out January 1st of, or let's see, January 1st of 2021. Remember, you always retire on the first day of the month. And say if I'm 58. Okay. And pardon me a second, whoever designed these webcams to be at the bottom of your laptop didn't think about fingers. So when I touch my keyboard, understand that you may see my fingers more than my face. All right. Say if I'm 58 years old at the time of my retirement, I'm not Medicare eligible. Okay. And it'll ask you, what's your drop status? Well, I see we have a few people joining us just by recognizing some of the names who've joined us who are still working in post-drop, but vast majority of you are not in drop, nor were you ever. So you'd want to click did not participate in drop. Okay, drop went away about 10 years ago this coming March. How many years of service will you have at retirement? And go down to the decimal. So say if I did 25 years, 28 years and 7 months would be 0.5833. Okay, that would be 28 years and 7 months. 7 divided by 12 is 0.5833. And will anybody else be covered? If I click yes, then I'll be asked some other questions. How many non-spousal dependents? I'm going to say I have 0 children on the policy when I retire. Is your spouse covered under the policy? Yes, she's going to be covered. And then they'll ask what's your spouse's current status, because if your spouse is actively employed with a PEEHIP participating unit, such as the Lee County Board of Education, then it might behoove you to get on your spouse's policy. Or if your spouse is a TRS retiree already, it might behoove you to get on your spouse's retiree coverage. Okay, but in this case, I'm just going to say spouse is none of the above. Okay, doesn't have PEEHIP. And is your spouse Medicare eligible? I'm going to say no. And then I'll just hit here and hit calculate. Now you're going to see 2 figures here. The $700 here is the retiree premium for this member who's 58 years of age with family coverage, non-Medicare eligible with 1 spouse, okay? So $700 is this member's premium, retiree premium. Now this is the cost shift. This is what's been shifted over from the state's portion onto your retiree premium. It's already figured in that $700, so you don't need to add these 2 together. It's just highlighting what that cost shift was from the state over to your base premium. In this case, it was $253.75. Remember, $201.25 of that is that subsidy component, and the rest is that age component for having fewer than 25 or being younger than age 65 at retirement. Now, let's take another look real quickly. I'm going to go back here and say, yes, I'm retirement eligible. I'm Medicare eligible. I'm going to say I'm 65. I'm Medicare eligible, and I had 28, same amount of years. And I'm going to say my spouse is also Medicare eligible. Okay, I'm going to calculate it, and you notice the premium is far lower because we're both Medicare eligible. So this is a really easy calculator to use. I encourage you to use it. Also remember, these premiums are before any tobacco premium, okay? Because if you're a tobacco user and your spouse is a tobacco user, that would be $100 more a month because it's $50 for the spouse and $50 for the subscriber if you're both tobacco users, right? And then it does not include the $50 member wellness premium. So if you go ahead and get your wellness screening and your spouse gets that wellness screening, then you wouldn't be paying that extra $50. But in this calculation down at the bottom here, this doesn't include any extra premium for being a tobacco user or not getting your wellness screening done. Now, when I go back to the presentation here, I want to remind everybody that while your PEEHIP premiums may look pretty high, we do have a premium assistance program that's available for all of our members who have a household size and a household income that falls within a range. If you apply for this premium assistance each year during open enrollment, you can get that premium assistance throughout the plan year. Say if I had, I'm gonna get my little trusty laser pointer out here. If there are two of us in the household and our household income was between $34,481 and $43,100, and I applied for this, I could see a 20% discount on my premium. Okay, you have to apply for this every year during open enrollment in order to have that premium assistance throughout the plan year. Now, you may not qualify for it initially, but maybe later on in life, you have a loss in income, for example, or for whatever reason you add to the household size, then you may qualify for a discount later in life. But you always have to apply for this every year. And in our member handbook, also on our website, you can find the PEEHIP Premium Assistance application. Okay. Now, our retiree premiums are deducted from our monthly TRS retirement benefit. So, unlike right now, where your premium is deducted before taxes are withheld, it's different in retirement. In retirement, you will have federal income taxes that will be withheld first, and then your PEEHIP premium is deducted from your TRS retirement benefit. So your retiree premiums are not tax sheltered as they are for you as an active employee. Okay. Now, while those retiree premiums are deducted from that retirement benefit, if for some reason the premium is greater than your TRS monthly retirement benefit, you'll be paid your full monthly TRS retirement benefit and then be billed on a monthly basis for your PEEHIP premiums. Okay, it doesn't happen too often, that situation. Sometimes, however, with our not so highly compensated retirees, their retirement benefit may not be enough to cover the premium, and as a result, they'll be paid that benefit and then billed for the retiree premium. Your surviving dependents. Okay, nice thing to know is that once you've retired, you have your PEEHIP health insurance coverage. If you were to pass away, your surviving dependent can continue the same coverage that he or she was enrolled in while you were living. Okay, now there's going to be a little bit more of a cost for that surviving dependent because there's no longer any subsidizing from the state of Alabama, so they'll be paying that full monthly premium. In order to keep that coverage, those premiums must be paid and eligibility must be met. For example, if one of your surviving dependents is a child and that child eventually will age off at age 26, then that surviving child dependent would not be able to continue that coverage because they would age off at 26. That's what I mean by eligibility met. Now, the thing to remember for those surviving dependents is that they can certainly keep the coverage that they were enrolled in at the time of the subscriber's passing, but they're not able to enroll in any new types of coverage through PEEHIP. When I say new types of coverage, I'm talking about, for instance, the optionals. Say if they were not enrolled in the optionals at the time of your passing, then they can't enroll in those optional plans later. Also, say if that surviving dependent is your spouse and your spouse decides to get back into the single life again and find a new person to share his or her life with after you've passed away, you can rest assured from the grave that your surviving dependent is not going to be able to add that newfound love to his or her coverage because there's no enrollment in any new plans after the retiree has passed away. That surviving dependent can keep the same coverage, but they can't add anybody or enroll in any other types of PEEHIP plans. There's also no reinstatement if that PEEHIP coverage is ever canceled by that surviving dependent. So keep that in mind for your loved ones. If they're on your policy when you pass away, they cancel it, they'll never be able to get back reinstated into PEEHIP. Now, if you're leaving Alabama, some of you may wish to do that. I myself, I'm a transplant. I would never want to leave Alabama. I love it down here. But if you choose to and you're a non-Medicare eligible retiree dependent, you can continue your PEEHIP coverage across state line, Blue Cross Blue Shield, and the provider of your, it's recognized by the Blue Cross Blue Shield provider in the state of your residence. Very simple. And if you're a Medicare eligible retiree or Medicare eligible dependent on a retired contract, that PEEHIP Humana Group Medicare Advantage plan, you can still use that out of state and use out of network providers at no additional cost share. And that's important to remember because most Medicare Advantage plans don't work that way. I want to make sure everybody understands that PEEHIP was instrumental in designing our Medicare Advantage plan through Humana. So it's not something that Humana took off the shelf and said, here, PEEHIP, this is our Medicare Advantage plan. We were instrumental in helping develop it, and that's the reason why there's no additional cost share if you use out-of-network providers. Okay. Yeah, I just see that someone asked if this was being recorded, and the answer is yes, this has been recorded. So that wraps it up for me today. Here is our contact information. And if you'd like to jot down this information, you can email us. That's going to be your best way of getting in touch with PEEHIP. Right now with the pandemic, a lot of people are calling. We're not taking in-office visits, so the phones are filled up. I think the best way to reach out to PEEHIP or any of us at RSA is by email. You can also visit our website, as I showed you earlier, and also the RSA Member Online Services portal, which you can access your account. Many of you have already signed up for that. Notice that your TRS annual statements are posted to this Member Online Services account on our website. I encourage you to set up your account if you haven't done so already. Always visit the Humana PEEHIP website as well to find more information about your PEEHIP Humana benefits.